5 years ago, Wahid was basically the only halal investing option available for most Muslims. But now there's so many more options out there. So the question is Wahid still worth investing in 2025? So in this video, we're going to take a deep look at Wahid. We've done it before, we're going to do it again. We'll cover their product range as it stands now. We'll share what 45 real investors think from a survey that we've done, and we'll give you our honest verdict on whether Wahid Invest still deserves a place in your halal investment portfolio today. For those of you new to this channel, I'm Ibrahim, and since 2016, I've helped millions of Muslims with their personal finances and their investing. I run an investment firm called Curate Capital, and I've written a best-selling book and hold qualifications in Islamic law, investment management, and corporate law. Now, before we dive in, I should flag that in a few areas, Curate Capital, our investment firm, and Wahid Invest are competitors. Whilst fundamentally we focus more on private market investments and Wahid's bread and butter is public investments, there are a couple of areas now that we have started to overlap further to Wahid's recent product expansion, namely real estate and venture capital. There are still nuances and differences between the two offerings, and we'll explain all of that when we cover those investment products later on. You might also be wondering, why on earth do these guys regularly give coverage to their competitors? You see, the reason is simple. We want our mission to succeed, for Muslims to level up financially. And if that happens through us, great. And if it happens with a competitor, also great. We've got a platform at IFG and we're very thankful for that. But we think it's only fair to our audience to actually give a full perspective and actually list out the various different investment products out there so that you can decide for yourself. Plus, the reality is Curate Capital and other investment products won't be right for absolutely everyone. And so you need multiple players in a field to actually have the customers given the best experience and to be catered for regardless of where they are. With that, let's begin. Okay, let's start with what Wahid actually offers in 2025. You see, in the early days, it was a robo-advisor. You picked your risk level and it allocated your money across halal stocks, a bit of sukuk perhaps, and maybe some gold. That core model still exists, and it's still the main reason many people use Wahid. But over the last few years, the platform has expanded quite significantly. Today, you can use Wahid to invest in real estate. You can back startups through their venture offering. You can even open a pension. And you can even write an Islamic will, since they bought out iWills and True Wills in recent purchases. It's become a much more comprehensive ecosystem. But of course, with more products comes more complexity. So let's break down each of their product offerings, and if you stick around for the end, I'll be discussing how Wahid Invest actually compares against the wider competition out there as well. Wahid's core portfolio still does what it has always done, which is offering a diversified exposure to halal public market investments through a mixture of different funds, ETFs, etc. They use well-known providers like iShares and HSBC for global and emerging market equities. Sukuk exposure comes through Franklin Global Sukuk Fund, and gold is handled via the ETFS Physical Gold Fund. The idea here is simple. You get exposure to hundreds of companies and assets in one go, without having to build that portfolio of funds for yourself. This is especially valuable if you're just starting out and you've got no idea what funds are out there, where to find them, etc., and you want just someone to hand this over to. You can choose your risk level when you sign up, from conservative all the way to aggressive, and then Wahid takes care of the allocation according to their preset portfolios. Okay, so far, so familiar. What's changed are two main things. The first is their fee structure. Since the last year, their fee structure has changed from this all the way to this. So as you can see, they have introduced a flat amount for people with smaller accounts, and people with smaller accounts numerically make up the bulk of the Wahid Invest investor platform. The second thing you'll observe is that for those with larger portfolios with them, the rates come down quite significantly. The bottom line is that for most investors, their fees have gone up, and fairly substantially as a percentage. As an actual discrete number, perhaps not so much. Do I think this is a good thing? Well, you see, the answer here is complicated. The problem is, I don't think robo-advisory is particularly a great business model, if I'm honest. If we look at the example of some of the other robo-advisors out there, it's not been a stellar success. The margins are wafer thin in this industry, and you need to get a significant level of scale for things to stack up. And that's why Wahid is still not at break even across the global business to this day, though they are making strides in that direction. So frankly, fees have to go up in order for the business model to work. But then consumers rightly ask themselves, well, why can't I just do this myself for a lot cheaper? So the only way out of this, in my view, for Wahid, is to leave robo-advisory as a loss leader. So keep the fees really low and make them similar to the rest of the market, but then go into higher margin products and to do them really well. And the kinds of products they should be doing should be focused around public markets, not necessarily the private markets just yet. Because frankly, as a community, we are nowhere near solved on all of the different public market problems that are out there that we need to solve as an Islamic finance industry. And because Wahid started in that space, that is their competitive edge. To be fair to them, one such product is the self-invested personal pension account, or SIP for short. And they have actually now partnered with a firm, and you can open a SIP with them and invest in the Wahid portfolios for your pension as well. Now, SIPs are a different beast from your normal workplace pension, which is where you and your employer contribute in regularly. SIPs are a standalone pension that you voluntarily open up, and where you usually have a choice over where it is invested. The fees are the same in the Wahid SIP portfolio as the core portfolio, but with an additional £2.50 monthly maintenance fee on top of that. And if you're self-employed or a freelancer, or you've got some old pensions that you want to consolidate into one and you need a halal investment option, this could be a great way to take control of your pension situation. Wahid Invest have also recently launched Wahid Real Estate, which is a product that allows you to invest in individual properties in the UK and then to potentially benefit in the rental income and any gains in that property value. You can start with just £500 and Wahid manages the whole thing for you: tenants, maintenance, the legal stuff. That all sounds great. Now, this model isn't entirely new. Platforms like Yielders have been doing fractional property investment for a long time, and there's lots of other examples across the world. People like Republic. In the UAE, you've got people like GetStake and SmartCrowd. But what Wahid has done is bring it into a wider ecosystem that they have already built or are building. If you're already using Wahid for your investing, it's quite convenient to have some real estate in the same place as well. And for many Muslims, property has been a go-to asset class, and the idea of getting this steady, tangible rental income, especially in the form of quarterly dividends, just feels a lot more grounded and predictable than the ups and downs of the stock market. So this does add a nice bit of balance and a nice little flavor to an otherwise very equity heavy portfolio. But let's talk about the fees as well, because this is where things start to crank up a little bit. There's associated costs that come with buying and maintaining and selling a house, which is all pretty standard. What investors want to know is how much Wahid Invest are charging. Well, here's the breakdown. You've got 3% due diligence fees and admin fees. You've got 3% transaction fees. And then there's a property management fee, which is taken out of your rent, which I would typically expect to be about 10% of the rent. And then finally, there's also a cut of the profits when the property is sold. And typically I would expect that to be around 10 up to 20%. And by the way, the amounts of both the property management and the profit share will vary from deal to deal. So yes, you're getting a hands-off sharia-compliant property exposure, but you are having to pay fees in order to have that privilege. And that shouldn't be sugar-coated. On the flip side, to those who say that these fees are too high, I would invite them to go ahead and actually engage directly in a property transaction, and you'll very quickly see where the costs actually end up coming. So whilst immediately, compared to their public equities fees, these fees are a lot higher. It's not apples and apples. This is apples and oranges. This is a different ballgame. It is also pretty early doors for this Wahid project. They've done less than half a dozen deals, and all of the deals have been sub 7 figures, few £100,000 each. So if you're someone who wants to build a portfolio, you'll have to do it slowly and over time. This isn't a fund vehicle where you invest once and it gives you exposure to a whole bunch of different things. It's also worth noting this is still property. Your money is tied up for 5 years and there's no real secondary market as far as we know, which means that once you're in, you are in for the duration. If you're looking to add some real estate exposure to your halal portfolio and you don't want the hassle of managing it yourself, Wahid's offering could work. But if you're fee conscious and you think you might need that money quite soon, then probably isn't the best place to start. In terms of alternatives, there are some excellent alternatives for you to look at. First is publicly listed REITs. These are real estate investment trusts. A number of these are actually sharia compliant as well, that you can have a look at. And these are portfolios of real estate that give you a steady return. Usually the yield, however, is a little bit lower in the public markets. The second area that you can look at, and this is a little bit more international, is places like Republic in the USA or GetStake or Smart Crowd in the UAE, or in the UK you've got Yielders, and then you've got Curate's own real estate offering as well. And then finally, if you want to have real estate exposure but not necessarily the equity exposure, then you could go for someone like Nesta, which gives you a fixed return that is linked to property without necessarily having the equity upside that you would get from a Wahid real estate investment offering. Or if you're clever and you're really into your investing, then you might actually dabble with a range of these options and really give yourself a nicely diversified real estate portfolio. Now, if Wahid's real estate is the slow and steady option, then Wahid Ventures is the exact opposite. This is their startup investment platform where you can back early stage companies, again, from as little as £500. This is the high risk, high reward stuff. You're putting money into startups that are pre-seed or seed stage long before they've become profitable or even proven themselves out to have a clear business model. Now, as someone who often looks at the same deals as Wahid, I think it would be unfair to Wahid Ventures and to their portfolio companies to comment on some of the individual deals that they've done. But as a general comment, let me explain to you the key indicators that you should look out for with any investment platform that is dealing with startups. The first of those things that you should look at is deal flow. Are they getting high quality deal flow where the co-investors are serious funds and the angel investors are serious players and the founders are people with a very credible track record and background? The second thing you should look at is the track record, and the exits in particular are a helpful indicator of where this startup offering is actually at and how many deals they've done. The third is the fund manager and how much are they going to add value somehow. How do startups perceive these fund managers as well? Because that will allow them to either win the deal and get your money into that startup or not win the deal and your money will be parked into some other startup that isn't necessarily as good. So those are the three things that I would look at. In terms of customer service on this offering, what I've heard from customers is that it's pretty good. And the platform they use is a standard one used by many in the venture capital industry. So it's well tested, it's clean, and it's reliable. The thing that the product doesn't offer right now is a pooled vehicle to invest into startups through. It's only deal by deal, rather like the real estate side. This is a problem for many reasons. The big one being a lack of diversification for investors. You're going to have to build that diversification up over time. And the second is that the best startups, let's be honest, they typically don't want to publicly list all of their details on a crowdfunding platform for everyone to be able to look at from as little as £500. Now, if the best startups don't want to get listed on a platform and you are investing through a platform, ipso facto, you're not necessarily going to have the exposure to the best startups, which therefore means that your portfolio isn't going to be the best portfolio that it is possible to have in venture capital. So that's the challenge. The other issue is that having talked to many people within and around the Wahid ecosystem, the direction of travel by Wahid is now very clearly towards the real estate side of things, not venture capital. So I'm not necessarily sure that there's going to be that many new deals coming along with any degree of regularity. So again, that makes it challenging when it comes to diversification. So all in all, the big worry I have is that if they're not necessarily as focused on this area as before, and they don't have dedicated people associated with it, then you won't necessarily get the regular deal flow from them that you need to build a diversified portfolio. But if you've already got your core investment sorted, things like the stocks, the sukuks, maybe even a bit of gold or real estate, and now you've got some money extra that you want to dabble with, then putting some money into a random startup could be quite an exciting addition. But even for this type of investor, I would encourage a portfolio approach, just because the risks in venture capital are such that you need to have a portfolio. You can use other platforms like Crowdcube and Seeders, Republic, etc. to at least build a diversification. But honestly, I'm not sure you'll get the best deals even here. For that, I genuinely do think that you need to be investing through funds or angel syndicates, such as those on AngelList. I know this because I started our platform, like Wahid as well, deal by deal, but I very quickly realized that the fund route was the best route, as otherwise you don't get allowed into the best startup deals. Since we became a fund, things have become a lot easier in getting access into those deals. Let's talk about wills. Most Muslims know they need a sharia-compliant will, but for one reason or another, it just never gets done, right? Wahid now offer a will writing service powered by iWill solicitors in Birmingham, where you can now create an English and Welsh law and sharia-compliant will online in as little as 20 minutes. How much will this cost? Well, it's £30 for an expert consultation, it's £125 for a simple will, and it's £900 plus for complex estates, and it can be in the several thousands of pounds. So for comparison, we at Islamic Finance Guru charge £98 for a simple will and £348 for larger estates. So Wahid isn't always the cheapest around, but it is pretty price competitive. Other Islamic friendly solicitors also exist, such as Farani Tailors and others out there, and they often will give you products in roughly the same ballpark. For those who are earlier in their journey, you could probably do a free will very easily. There are templates available online, including our website, that you can download, and you can just get yourself an Islamic free will sorted as well. That said, if you're already using Wahid and you like the idea of keeping it all in one place, this is a tidy little add-on. And for more complex wills, iWills are an excellent team with a lot of experience dealing with larger pots of money. The only other people that I typically refer people to when it comes to larger estates is Tasneem Khalid at Private Client Solicitors. The bottom line is, just get it done, guys. Whether it's through Wahid, IFG, or anyone else, don't leave your family with a mess to deal with once you pass away. Wahid doesn't just offer portfolios, they've also got their own ETFs listed on the US stock exchange. HLAL or Halal gives you some exposure to large sharia-compliant US companies. Think of it as a halal version of the S&P 500. Ummah, which is their broader global Islamic ETF, gives you a diversified exposure across a range of geographies and isn't necessarily as US heavy like Halal is. These ETFs are sharia-compliant and diversified and relatively low cost, with an annual fee of around 0.5%. And they've actually performed pretty decently, especially Halal, which is up 101.67% over 5 years at the time of recording, which is a tad better than the S&P 500 itself, which was up 100.4%. Now, here's the interesting part. You can buy these ETFs yourself directly from any decent broker. So you might be wondering, is it actually cheaper to do it yourself? One of the common things we hear at IFG is, can't I just do this on Trading 212 or Hargreaves Lansdown and skip the Wahid fees? And the short answer to that is yes, to an extent. You can buy some of the same ETFs like the Wahid uses, such as the iShares MSCI World Islamic Index or Physical Gold, and you'll avoid the platform fees and keep full control when you do that. But here's the interesting thing. So before, it used to be quite easy for you to find out what they're investing in. These days, you have to actually invest for them to finally tell you what the funds are. But let's assume you figured out what funds they are. Even then, when you trade yourself, there isn't necessarily any automatic rebalancing between the funds in your portfolio. There aren't any regular adjustments to match your risk profile, and you will need to keep manually tracking everything yourself. And let's be honest, most people just don't get around to doing the basics of even setting up an account, let alone doing all of this as well. Life just gets in the way, and suddenly your portfolio is 80% tech stocks, and you're wondering why on earth your returns are all over the place. That said, if you are planning to pick a few ETFs and also invest in individual stocks on the side, and you're happy to keep an eye on this stuff every month or so, this can actually be a pretty decent middle ground for many people. DIY investing can work really well if you enjoy it and if you're willing to stay on top of things. But if you want something more hands-off and you don't want to put your mind into learning any of this stuff, then Wahid Invest is still there and it earns its keep through just sheer convenience. This might be a good point to raise the point around BDS, boycott, divestment and sanctions. I know that Wahid Invest have taken some serious heat around this particular issue because some of the stocks in their funds aren't necessarily in line with the ethical standards that some would like them to adhere to. What I would say to this is that, frankly, we'll do a proper video on this in due course. We've actually done an article on this that's linked in the description below that you can check out. I think the punchline here is, firstly, Wahid definitely should be putting pressure internally to basically try and do its absolute best when it comes to avoiding unethical companies. The second, to those who are putting pressure on Wahid, is to make sure that you're being consistent. So you shouldn't be writing articles powered by Google and Microsoft on devices that are from Apple and on chips that are from Nvidia to actually then do this critique, because it's deeply, you can see the problem with doing that, right? So I think the issue cuts both ways, and we'll cover it in a detailed article. But for this video, what I would say is, if this is particularly close to your heart, there are actually alternatives that give you that transparency for you to be able to decide which stocks and companies you want exposure to yourself. And we'll mention those later on in this video. Okay folks, now let's hear from actual Wahid investors about what they have to say about their experience. Let's start with some of the Trustpilot scores, which, to be honest, are a bit of a mixed bag with an average score of 3.0, which is not great. The common themes here are withdrawals are taking too long, slow customer service support. Around 50% of their reviews are 5-star though, with investors pretty happy with the platform and returns. And we do have to remember that most people who leave reviews are going to be people who are not necessarily happy. Having said that, it is still a little bit low for my liking, if I'm honest. We also asked our own IFG readers via our newsletter, and we got 45 responses. The positives that they mentioned, whether the app is halal, it's easy to use, it's got good feedback as a result of that. What our readers felt could be improved, with a few comments about their fees as well as their customer support and how useful and quick it had been. Now, one thing I found really interesting, which won't be obvious to you folks, but is also quite worrying, I think, for Wahid, is our audience's answer to this simple question. How disappointed would you be if Wahid ceased to exist? This is called a product market fit question. And what you want is at least 40% of your people to say, we would be really disappointed if you didn't exist. Because what that means is they really will miss you if you're gone. Like, you know, if I ask my kids, would you be really disappointed if I wasn't here? I would like to think I hit the product market fit score, right? I want them to be at least 40% very disappointed. Any number that is less than 40% should be concerning for any business. And Wahid is currently on this data under 40% for their business. Now, the good news is for Wahid that the feedback to them is plentiful, from customer feedback like the stuff that I've just shared, all the way to the more strategic advice that we covered earlier on in this video. If Wahid literally just implement that, they should see the score improving over time. But they desperately do need to do that, in my view, because we can't afford for a company like Wahid Invest to fail, a company like Wahid Invest to not be at product market fit score, and we need a company like Wahid Invest to have a clear strategy and a clear mission, frankly, that is well articulated and points the direction in a certain way and takes their community with them on that journey. Back in the day, Wahid was the only serious halal investing option out there. Now, thankfully, that's changed. And it's good news for Muslim investors. More platforms means more choice, it means more innovation, it means better pricing all round. So how does Wahid Invest stack up against others? Let's break it down. Well, first, you've got Simply Ethical. If you're just looking for a simple halal portfolio, Simply Ethical can be cheaper than Wahid at times, especially for smaller investments. The platform is pretty no frills, but if cost is your main concern, you're not fussed about the extra services, it's well worth a look at. They also offer financial advice for larger clients, usually above 100,000 plus, which can be very helpful for some people who are particularly planning for retirement or wanting pension advice, etc. The second option is Amal Invest. Amal is a relatively new platform that takes a slightly different approach. Instead of charging an ongoing percentage fee like Wahid, they have a one-off setup charge, which can be much more cost effective over the long run. This is also a great business model because you get a whole chunk of revenue up front, then further reinvest that into product and into marketing as well. They offer two types of products. One is growth focused and the other is stable income, which is for people who want regular dividends. What is happening with Amal Invest relative to Wahid is that they don't necessarily have their own funds. They're doing something quite interesting, which is where they're looking into the funds that already exist out there, the mainstream ones as well, not just the halal ones. And then they're seeing which stocks are in that fund, and then they're presenting that to their investors in one packaged way. And the interesting thing that you can now do through technology is automatically plug that list that is going to be automatically updated into your broker account. It could be any broker account. It could be Alpaca, it could be Trading 212, whatever it is. And then that allows you on autopilot to basically get a fund exposure by proxy. But this fund exposure is taking the advantage of the choices that expert fund managers have gone. But then what really stands out here is that Amal have built in additional screening. They actively filter out companies that are involved in activities many Muslims may want to avoid, including those on the boycott list. So if ethical screening and being very particular about the companies is something that you care about, then Amal Invest could be well worth considering. Another investing platform is Zoya, which started its life as halal stock screening app. And I think it's fantastic. It's come a long, long way. And I think it's probably the market leader along with Musaffa. But the interesting thing now that they're doing is they're basically offering a very similar product to what we've just talked about, Amal Invest, where again, you can screen stocks, you can look through mainstream funds that are not necessarily halal, but make it halal. And then you can add on additional BDS filters on top of that, and then link it to your broker account, and then off you go and you can start investing that way. So both of these companies are effectively using the latest technology out there to be able to offer a relatively personalized and affordable solution for investors who are looking to invest in the public markets. To be clear though, Zoya and Amal Invest are not robo-advisors. You make all the decisions and the investments yourself. Zoya and Amal Invest just give you the tools to be able to do this pretty easily. Another alternative is Trading 212 or DIY platforms like AJ Bell or Hargreaves Lansdowne. This is the wildcard option, if you will. If you know what you're doing, you can build your own halal portfolio using ETFs and stocks, and you can skip the platform fees entirely. But you will need to do your own screening, your own investments, your own rebalancing, and you need to stay on top of the admin as well. So if you're comfortable with that, it is an option. It's not for everyone, but this is what I personally do for my own investments. And then of course, there's us, Curate Capital. We also offer halal investing, but we do something quite different to what Wahid do. Wahid gives you public markets access, stocks and sukuk and ETFs. At Curate, we focus on private markets, income funds, real estate funds, startup funds, private equity, investing in traditional businesses. As you can see, Wahid is the place to go to when it comes to stocks and shares because we don't offer that yet. On the private market side, this is our expertise and we've got a really deep amount of experience, but also coverage in this space. When it comes to real estate and startup investing, Wahid Invest have now started offering those products as well, but they are a little bit earlier in their journey. The other key difference is that because of our regulatory license, our minimum ticket is £5,000 and we only deal with high net worth or sophisticated investors, at least at this moment in time. So the typical investors that we attract are naturally going to be a little bit older and a little bit more well off. And honestly, we're not necessarily, with our products, we're not necessarily the perfect fit for a first time investor looking to just dip their toes in with £100 or £500. So folks, whether Wahid is the best option for you really depends on what you're looking to invest into, how hands-on you want to be, and what stage of your life you're at with your financial journey. If you're a beginner investor, time poor, looking for halal investments that are diversified, automated, and compliant with a whole bunch of pretty attractive ancillary products, Wahid is still one of the best options out there, better even than Curate Capital. If you're more experienced and have a larger portfolio and you want to take a more hands-on approach, then you might actually want to save some money by going DIY or mixing platforms, including more advanced platforms like Curate or Nesta perhaps, into the mix as well. Ultimately, Wahid has built something that's impressive, and they've blazed a trail where others have followed. And for that, they deserve some credit. If you've used Wahid yourself, let us know in the comments below what worked for you, what didn't work for you, and what would you like to see improved by the Wahid Invest team. Until next time, Assalamu alaikum.